Hi everyone, it's Alex here at Sestrian Capital Research. Welcome to our live webinar. It's currently Wednesday the 2nd of August, 5 o'clock Eastern, and we have a very special webinar today. First of all, we have invitees from across our many services, so thanks everyone for joining us. And we're going to talk later to Jason Krutzky at TrendSpider. Now, if you read our work, you know that we use charting extensively, and the majority of the charts we produce, we do in TrendSpider. That's not an accident. We really like the platform and the tools, methods it offers, the support the company offers, and the direction the company's taking. So whenever we get the opportunity to have folks from the company to come and talk to our members and subscribers, we really like to do that. And Jason will do a great job for us and for TrendSpider in a few minutes. Before we do that, I want to tell folks a little bit about our business. Many people here on the webinar are new to us, and so just a bit of background I think would be helpful. I want to touch up briefly on why we think charts are so important. You know, we have fundamental analysis skills here, technical analysis, the whole 9 yards, but we put a lot of weight on charting, and I'll explain why. We'll illustrate that with a quick run through the equity indices, the S&P, the NASDAQ, the Dow, Russell, using those TrendSpider charts. And I'm going to hand over to Jason, who's going to show us how to use their platform properly, because, you know, frankly, we just scratched the surface. So before we do any of that, we're going to just run through our usual disclaimer, which is on your screen right now, and a little bit of housekeeping. So we run all of our webinars on a live open mic basis. If you have questions, points, comments, criticisms, anything, then we want to hear them. So the best way to do that is, if you can, plug in your audio equipment, unmute yourself your side, and just shout into the system. If for any reason you can't use audio, or you prefer not to, you know, situation where you can't do that, then by all means type questions in the question box here in the webinar system. Alternatively, if you are watching the recording of this on YouTube, then just post comments to the YouTube post, and we'll get to them in due course. Okay, let's do our disclaimer and we can get going. So disclaimer, this webinar is intended to be for US recipients only, and in particular is not directed at nor intended to be relied upon by any UK recipients. Any information or analysis in the webinar is not an offer to sell or the solicitation of an offer to buy any securities. Nothing in the webinar is intended to be investment advice, nor should it be relied upon to make investment decisions. Sestrian Capital Research, its employees, agents, or affiliates, including the presenter of this webinar or related persons, may have a position in any stocks, securities, or financial instruments referenced in the webinar. Any opinions, analyses, or probabilities expressed in the webinar are those of the presenter as of the webinar's date of transmission and are subject to change without notice. Companies referenced in the webinar or their employees or affiliates may be customers of Sestrian Capital Research. Sestrian Capital Research values both its independence and transparency and does not believe this presents a material potential conflict of interest or impacts the content of its research or publications. Okay, so just a few words about Sestrian. We're a pretty unusual business. We are a 100% independent, pure play investment research business. We are an SEC regulated entity. We take that very seriously. So if we publish work on stocks, on ETFs, on any securities, then believe me, we've considered it seriously. We could be wrong, of course, often are, but the work is done to a really high standard. And our goal is to work at the highest institutional grade level. We expect the quality of the work done here at Sestrian Towers to be as good as any you will find anywhere across the buy side, anywhere across any fund you can find in the world. That good. Doesn't mean we're always right, of course we aren't, but we take our work seriously. My background, I'm the founder and the CEO, so it's my 3rd decade as a professional investor. Started out in venture capital, moved on to leverage buyouts and then public securities. I've run Sestrian for 6 years now, and we've grown at a fantastic clip. We now have many authors and analysts writing on our platforms. We offer services from the cheapest at $99 a year, entry-level swing service on Seeking Alpha, up to a couple $1,000s a year for our Inner Circle service that we publish ourselves. And we're delighted to host many talented folks now that write for us, that cover single name stocks, that cover the treasury bill and rates market, that cover options, that cover ETFs. And if you are new to our work, go to our website, check out our services. There's plenty you can find for free there, and see if you like it. And if you do, you can sign up for one of our paid plans. Now, why we believe charts are important. I'm just going to switch on to an article that I will post as a comment to the YouTube recording of this video. The article is called "The Problem with Fundamentalism," and it's something we published today. And the basic argument we make here is exactly how we run our own work, which is that if you want to understand the direction of a security, you're probably not going to find that out from any company's P&L, balance sheet, cash flow statement. You can read as many 10Ks and 10Qs as you like. You can read a year's worth of Wall Street Journal, have at it, but you're probably not going to guess correctly which way a security is going to go. And the reason for that is very simple, which is there isn't any edge to be had from fundamentals. Fundamentals are a great way to run your own business, or if you own a business and somebody else runs it for you, you want the numbers. You want to know what's going on. You want to see what's coming down the pike. You want to see what happened last month. Numbers are great for that. But for common stocks in traded businesses, that there really aren't what's going to help you. What's going to help you is to work out the demand and the supply of the stock, the security, the ETF, the bond, whatever it might be. And the way to work that out is by looking at charts. Now, charts tell you where a security has been, its pricing, and if you get good at any kind of pattern recognition, and there are, all technical analysis is pattern recognition, and there are many different methods of technical analysis. If you get good at it, you can start to make educated guesses as to which direction will the security move next, up or down, and is it going to keep going up for a week or two, or down for a month, or what? And of course, you're only ever guessing, you're only ever making educated guesses. But what you're really doing is you are following in the contrail of the large account players who move securities pricing around, right? So, your buddy down the road who trades Tesla, he doesn't move the Tesla price. However much you might think he does, he doesn't. However big his account is, he doesn't. Right? He doesn't move the price. Your sister, who runs, a $1 billion hedge fund, she doesn't move the Tesla price either. She might think she does, but she doesn't. People who move the price manage truly stupendous amounts of money, and they are typically large insurance companies, old line asset managers, boring companies where it's not particularly exciting to work, but they are consistently profitable year in, year out. Sometimes nicely profitable, sometimes not very profitable, the occasional loss, but they quietly just get on with business. And they can get on with business because they drag markets around. They know where markets are going because they move the market. And they spend all the time working out where the numbers might be going in a month or a quarter or 6 months' time. They will spend all their time working out which way economic policy is going. It won't have been a surprise to any of these guys that the US debt rating got cut last night. That will be all that have been expected already. Now, none of us as either individual investors or fund managers, even if you run a $5-10 billion hedge fund, and many of our readers do that, you can't have that same level of access that the CEO of BlackRock does. But what you can do is look at, well, where are these folks moving this particular security? Up, down, sideways, why? And stock charts are powerful because they help you follow what big money is doing. And if you can work out which direction big money is heading, then it doesn't really matter why. It doesn't matter if that's because growth is picking up at a company. It doesn't matter if it's because the company might be being acquired. It doesn't matter. What you're looking for is patterns that you can recognize: accumulation, distribution, short-term buying, short-term selling, a panic sell to avoid a piece of news that might come out in 2 hours. That's what you're looking for. And that's why we think stock charts are so important. Now, let's just use these TrendSpider charts we have up here just to take a quick run through the indices. We do this every day in print in our Inner Circle service, and we do this in video there sometimes as well. You can read about our Inner Circle service on our website. I just want to really quick run through these long-term charts for the S&P and the NASDAQ and the Dow and the Russell. So we like to use the Elliott wave and Fibonacci pattern recognition system. It just happens to be something that we find we're good at as a shop. Our predictive power is okay, which is about as good as you can get in this world. It's not by any means the only system to use, nor necessarily the best. You have to find a system that works for you. And when Jason talks shortly, he'll be talking about different methods of pattern recognition and different patterns that show up in the charts that they can produce. But here we use the Elliott wave system. So just let's look at where the S&P is right now. It's probably in the later stages of a 5-wave cycle that began at the 2015-2016 lows. Put in a big wave one up that peaked right before the COVID crisis. It dropped down into the COVID crisis very quickly, put in a drop between the 61.8 and 78.6 retrace, which is a classical wave 2 low. It put in a textbook wave 3 up. Wave 3 is typically the most powerful wave. They feel like they never end, and certainly 2020-21 did. 1.618 Fibonacci extension, perfect technical wave 3 top. And then a 0.5 wave 4 retrace, again, pretty much a perfect wave 4 down. It thought about troubling this wave 1 high, but didn't. Perfect drop and bounce right at that 0.5 retrace you see there. I'm in the middle of a move up. If this chart is in any way correct, and it has been for a few years now, most likely the S&P will top out somewhere in the mid 500s. Let's call it in the next year, sometime before the presidential election would be my guess. Right now, it's been only up since March. Markets don't do that, as you know, so we probably due a pullback of some kind. Perhaps this news on the Fitch ratings is it, we'll see. But at some point we're going to drop back and then a re-acceleration. But we're looking for the S&P to make new highs within the next 12, 14 months, something like that. We look at the NASDAQ. Two scenarios here on the NASDAQ. The most likely we have in the heavier wave pattern here. So the wave 1 starts at the 2018 lows. That's a really important point. It's the point at which the Federal Reserve last switched monetary policy from tightening, in other words, less money available and a higher cost of money, which is what they did in 2018. 2019, they switched to more money available, cheaper. And so unsurprisingly, that money becomes available to folks to buy securities with. And as a result, risk asset prices ran up in 2019. They peaked here February 2020. The NASDAQ put in a perfect 78.6 wave 2 retrace into the COVID lows. At this point here, you've got two things coinciding. First of all, the expiry of Q1 options, which is very put heavy. Dealer rebalancing took place, causing dealers to cover their short positions as they unwound those hedges. You then got a flood of federal liquidity, and in comes a veritable tsunami in the NASDAQ of buying, and it reaches again a really nice technical high, a 2.618 Fibonacci extension, wave 3 high in November 2021. Wave 4 down, 61.8 retrace, again a nice technical low, tested twice in October last year, and again in December, January, and then it's just been straight up since January. Again, as you know, that's not normal. So if this chart is right and we're in a 5-wave cycle in the NASDAQ, then we can expect the NASDAQ to peak somewhere in the mid 400s on the QQQ again in the next few months, year, something like that. However, the move up right now since January doesn't feel like a wave 5, which is sort of a last hurrah type of environment. It feels like a wave 3. And so one of the pieces of work we've been looking at here is, okay, is the scenario for the NASDAQ just a lot more bullish than we thought? And it doesn't change anything that we would do in our own personal accounts now or stock ratings we have now. But as that mid 400s approaches, it means we're going to have to think about, well, is it going to roll over there or keep going? Because there's a possibility that actually the world restarted in March 2020 at the COVID crisis low. That was let's say that was a reset, and let's say that the move up from March 20 to November 21, let's say that was a wave 1, right? That wave 1 high here, because it might be, and the reason it might be is because this retrace down here would be a 61.8 retrace of this wave 1 up. That's a perfectly reasonable wave 2. And the wave we're in right now, this straight up wave, does feel like a wave 3. It feels like it's unstoppable, which is what wave 3s feel like. And if it's a wave 3, then it might not peak until the 1.618 extension of this wave 1 here, which would put the NASDAQ peaking in the 650s on the QQQ before a rollover, sell off, and then a new wave at 5, even higher than that. Now, sounds fanciful right now, but that always does early in a wave 3. They always take you by surprise. So work we're doing here right now includes, okay, well, should we be thinking about, selling tech holdings as we get to the mid 400s on the QQQ, or is that just, really only getting started and we've got this other ways to run yet? And of course, the answer is we don't know. But the great thing about stock charts is you can tell when they're going to reverse. And Jason can talk a little bit about this later. But we called the low here in March 20 pretty well, and the high here in November 21 pretty well. And that's because, look, when you get these reversals off of a drop, you do tend to get these V-shaped recoveries that no one believes, right? Everyone thinks these things are going to go down forever. That's how emotionally we respond. But if you look at the chart, not your own feelings, then you can see a spike response and a move up. And then, and you'll see this in that note we've written, the problem with fundamentals is, if you then go back and go, well, what happened? Why did the chart spike down and move back up again? And when you realize that it was, in this case, for instance, it was two things: Q1 options expiry, short covering by option dealers, and then think of that as the catalyst, and think of the accelerant as a big wall of money dropped on the market from the Fed with the COVID stimulus. Then it's no surprise that the market V-recovered straight out of this low quickly and shot up. And then around the top here in November 21, well, why did it top out? Well, at the time, it was kind of telegraphed, which is the Fed was going to put rates up. But the question was, well, can you be sure that's a top? And the answer is, yeah. And if you look back in our work at the time, you'll see us saying it loud and clear, because the NASDAQ could not break through the high that it struck early in November. It tried a few times but couldn't, and then from January started to drop. And the thing is the S&P here did the same thing, right? So it reached this level October, could not push up through this. Tried in January but failed pretty quickly, and then broke down. So you could have looked at this and said, well, in my pattern recognition system, number one, in the S&P, I'm at a 1.618 Fibonacci extension wave 3 high. That's likely a top. In the NASDAQ, I'm at a 2.618 Fibonacci extension wave 3 high, slightly a top. The S&P can't punch up through that top, and the NASDAQ can't punch up through that top. And oh, by the way, if we were to look at the Dow was at a 1.236 Fibonacci extension wave 3 high, which is less exciting, but at acceptable wave 3 high level, couldn't punch up through it. And oh, by the way, at the time, this is a different chart we have for the Russell, but the Russell had basically just been through this sideways distribution pattern. This is basically big money dumping on small money, and peaked right at the top of that box in November and then rejected that. So if you looked at every major equity index back in November 21 and you'd gotten used to your pattern recognition system, be it Elliott waves or something else, you'd have gone, I think this is a high. We could go on. So this is how we use charts. We use charts. That's the first thing we look at with securities pricing, is the chart. We don't look at the underlying company fundamentals to begin with. We consider them for sure after the fact, but the first thing we look at is charts. If we get news that the Fitch ratings agency has cut the US debt rating, then our first answer is, yep, well, we were looking for a pullback in the NASDAQ and the S&P because one's due, and this is probably the catalyst that does it. We don't think about, well, how much therefore should a bond trade for, and therefore what's the S&P worth? That's all ex post facto justification. What we're looking for is, what level of sell-off might we get from that sort of shock to markets? Okay, so should in our personal accounts we be long, short, both, what? We looked at charts first, and then once we've seen the way the chart has moved or is moving, then we try to understand, well, why is that? Is it, if it's a single name stock, is it something to do with the company? If it's a things like the ratings agency, is it bond reprice? What is it? But the chart first. Now, if you schooled in fundamentals, and frankly I was, that's a whole different, completely different mentality, but it's the right one. Watch the price first and work out the logic second, because to be successful in investing and trading, you don't need to know why something happened. Your ego needs to know why something happened, but your wallet doesn't care. Your wallet just cares about, can you please try and guess which way it's going next, more successfully, more often than not. Now, with that, I'm going to hand over to Jason, and Jason's going to tell you a little bit about himself, about TrendSpider, and then I'm going to ask him to just present a few of the great tools that TrendSpider offers. We really, are basic users of the TrendSpider platform, embarrassingly so, in fact. But Jason will show you how to get more out of it. And then in the video and other places, we'll post later on links for you to sign up to TrendSpider if you want to. They offer some free plans, paid plans. We're an affiliate partner, so if you take out a paid plan using one of our links, then we may receive a referral fee for disclosure. But just take a look and see if it's something that you might like to use in your own work. Okay, so I'm going to hand over to Jason. Jason, you're live on audio. I'm going to make you a presenter right now.
Awesome, Alex. Well, thank you so much for having us on. Alex and I have kind of worked together off and on a little bit for, for some time now. I guess I need to show you my screen. Yeah, let's do that. It's a pleasure to be here chatting with you guys. Thank you all for hanging out with us. My name is Jason Krutzky. I've been at TrendSpider now for about 3 years. I started on the customer support side, just helping customers learn how to utilize the platform via one-on-one instructional periods of time. We would do like hour-long sessions with customers, and I did that every day for about a year. And then I switched over to the marketing team, where I make instructional videos and I write blogs about different styles of trading, different indicators, these sorts of things. So I'm a relative TrendSpider product expert. I'm still learning stuff about the platform too. We have a team of devs that are kind of constantly adding and tweaking and changing and making better the platform at all times. So I'm kind of always learning, and it's always kind of changing and growing. So I'm still figuring things out myself, but I've got a pretty decent handle on it. When Alex invited me to come and be a part of this presentation, he kind of said, bring some of your favorite tools that the platform is capable of. So I wanted to share a handful of things with you guys. I understand that maybe some of you are a little bit newer to technical analysis, and also some of you may be very, very versed on technical analysis. So I'm going to try and show a range of tools. If something is too complex for you, just let me know. If you have any questions while I'm kind of poking around the platform, feel free to write them in the chat. I'm pretty sure I can see. I don't think anybody's written anything in chat yet, but if you have any questions, let me know.
Jason,
yeah, sure.
Hey, Jason, just fly the screen. I'll monitor chat and I'll shout. Okay, otherwise it's too many things to do at once.
Okay, perfect. So everybody can see my screen, right?
We should be able to. I know I can.
Okay. Cool. Right on. Well, we'll just get going with it. So one of the alluring things about the platform is the way that we write scripts on it. Now, scripts can be used across the platform, and they are used across the platform. When you go and you run a scan, you have conditions that you're looking for being met across the market. You're writing a script, essentially, and these scripts are utilized everywhere, all across the platform. In your market scanner, they're utilized in your strategy tester. If you're looking to test and see how a particular strategy works, you're going to use them in multi-factor alerts to be alerted on conditions occurring. And one of the things that we just recently added to the platform is the ability to define the conditions of secondary tickers to the script that you have for the ticker that you're interested in. So I'll give you an example here. This is just a random strategy that we built for Apple. There was a period of time recently where I was just like building strategies that work. It's kind of a tricky thing to do, I'm not gonna lie. And so we built this strategy for Apple. It's some pretty basic conditions, but it only is speaking to what's going on with Apple. It uses some exponential moving averages and some moving averages. It's it's really very simple, but it's only speaking to what's going on with Apple. The strategy performs pretty well, 276% return on it versus the asset returning 284% over the same period of time. But what this new functionality opens up is the ability to define what's going on elsewhere. So let's say you only want to get into a trade on Apple, or you want to test this strategy on Apple, and you only want to get into it if the cues are kind of meeting a similar criteria, right? Well, previously you couldn't do that, but now you can do it. You can, and I'll just do something very simple here. Just do like a moving average cross on the cues here. So Alex, this may be kind of interesting to you. I don't know how much strategy testing you're doing, but you can come in here and change this to from on current symbol to on other symbol, and then define specifically that we want this condition to be true on the cues when all of these conditions are true on Apple in order to trigger us into a trade. And when we rerun the test, we actually find that it does perform a little bit better. You don't get a ton of extra alpha out of it. It's about 12 extra %, but you end up beating buy and hold when you do that. This opens up the possibility of just being able to really dig in with your strategies, and really hone kind of like why you're getting into them. You know, maybe you don't want to be long Apple if the cues aren't also flashing that signal. Maybe you another use case for this, we have a tool called a smart checklist. I'll show you guys what this is. What a smart checklist does is, if you have a particular set of conditions that you're looking for on a stock, it could be anything. If you have a particular set of conditions that you're looking for, especially if you have quite a few conditions, maybe, you know, I want price above the 200 SMA on the daily, I want the 8 and 21 positive above the 200 on the hourly, I want you know, 3 green candles in a row, I want above average volume. The more conditions that you add to your requirements for an entry, the more difficult it can be to suss out whether those conditions are true at any given moment. It requires looking at the chart and then kind of evaluating, and maybe you would have a bunch of conditions up, or you would have a bunch of indicators up on your chart, and you'd have to kind of like eye those indicators closely to know if those conditions that you're interested in are true. Well, what a smart checklist does is it automatically checks all those conditions for you and just tells you instantly. And so this functionality can be used in that way as well. So I'll give you an example. This is the XLE chart, the just, you know, energy chart. And what I have over here in my smart checklist is I have a list of some of the most important tickers within the XLE chart: Oxy, CVX, MRO, XOM, COP. Obviously, you know, people have been talking about the potential of this rotation into energy recently. And so that's why I bring this up. If the index or the sector is performing really well, you may want to know how the individual names within that sector are performing. Also, is it one name driving a big move in XLE? You know, did Chevron have some blowout earnings and XLE is running because Chevron is running? Are all of the names participating in that rally? Is there one or two outlier names that maybe aren't participating while all of the others are going? This is just an instantaneous way to know that sort of information. So
I'm gonna, Jason, I'm gonna butt in here. So
yeah,
this to me is a really useful tool. It's not one that we use, by the way, because so I'll give an example of why this is good. I'm hoping everyone can hear me okay. Hang on just 1 second. Yeah, so here's an example of how we do this manually in our work, but it would be much better to automate this. So if you look at, you know, the recent market move up, as everyone knows, the S&P and the NASDAQ, you know, rocketed up from January, certainly from March, April. And you saw all this talk about, no, it's not really a rally, you know, there's only, you know, 7 stocks involved. And that wasn't true. But what was true was there was a lot of stocks that had yet to participate. And so one of the things we did is manually, I might add, go through all of the components of the Dow. So what we did is we built in TrendSpider a list of Dow stocks on our watch list. And then we went through each one and went, well, okay, the Dow itself is starting to move up, not as fast as the NASDAQ, but probably is going to it is going to move up. We're going to see some sort of rotation to value. Let's look at which of the Dow stocks have yet to participate in the 2023 rally. We did this about, I want to say, 6-8 weeks ago. And within that, we said, well, okay, which of these stocks are looking like they're forming accumulation patterns? We can talk about that another time, but that's a characteristic of, you know, big money buying up positions in anticipation of a move. And we found, I think, 5 names that look like that. And then another thing we'll do is try and cross-check that with option implied volatility. So if we see an ETF here at XLE that is moving up, if we see component parts that might be, as Jason says, MRO or CVX, one of those, that has not moved up, but we see an accumulation pattern within TrendSpider, and then we see that option implied volatility is low, meaning, you know, nothing very exciting happening in the option right now, which is usually code for something exciting will happen in the future, could be move up or a move down, but a move, then we think, okay, that's a single stock that maybe we want to start accumulating ourselves. So the tool that Jason is showing you here is a way to automate quite a lot of that. It's a way to look at, well, let's compare the ETF to its major components, because very often either an ETF will move ahead of many of its smaller components, certainly, or sometimes the top 2 or 3 parts of that ETF and the S&P in the early part of this year was a good example, will start moving, but the rest of the ETF will be laggards. And so you can use this as just a little time machine to look into the future to go, well, this has happened with these stocks in the last 2 or 3 months. What is it that might happen in the future? The perfect example of why using stock charts rather than fundamentals as your primary tool is a really good method. So these strategies that Jason's talking about now, that they look a bit bewildering if you're new to them, but they're actually fairly straightforward to set up in TrendSpider. You do not need to be any kind of coder. There's a knack to it, of course. You can learn that. TrendSpider will help you learn that. But these are really powerful tools. So back to you, Jason.
Yeah, so that is a really key piece, is this platform, there's no code in this platform. If you can think it, you can write it out. Now, learning how to write it out it's not hard to do. It's really kind of more so difficult to come up with the ideas. If you have the ideas, it wouldn't take very long to put the scripts that you're looking to put together. Speaking, I'm going to kind of shift gears here a little bit because I want to highlight as much as I can in our short time. Dataflow is a new tool. I know we're talking about charts. It's kind of funny that I'm highlighting some tools that are peripheral to charts, but all this stuff is interesting to me. So, you know, I wanted to share it. But Dataflow is a tool that takes all of our sidebar widgets and puts it kind of in a central dashboard. Think of this as like the Bloomberg that's inside of TrendSpider. And so what you can do is you can add all kinds of different Dataflow widgets to the bottom of your chart. And these are going to update either in real time or near real time. There's a couple of items that update at the end of the day, every day, but things like unusual options. This, obviously, folks are wildly interested in unusual options. I'm not going to get into what makes an option order unusual, but if you need more information on that, I'm happy to provide it. But what we can do now, so this is a real-time view of all of the unusual options orders that are coming into the market as they're coming into the market. And what we offer now is we offer like extensive filtering for this. So if you're looking for very specific size orders or types of orders, this is a way to find them. You can add multiple filters. So for example, let's say you wanted the days to expiry to be no more than maybe 3. It's Wednesday now, so we're looking maybe for stuff that expires no later than Friday. So we'll say like 2 days. And let's also add something like premium of the order. So the amount of money spent on the order is greater than or equal to, I don't know, $250,000. Let's also say that we're specifically looking for calls. I don't know, we'll say type and change it to calls. And then we can add things like tags, and tags is where we define the type of call order that it is. Is it a trade? Is it a sweep? Is it at the ask? Is it at the bid? different different tags denote different levels of conviction. So if you're looking for like highly convicted trades, large orders, calls, this is your way to find them. And so for this, what I would say is contains all of, I would type in sweep, because sweeps generally kind of speak to a need to get into a particular position. And then we would say at ask, because again, if somebody is really just really needing to get into some sort of position, they don't care. They're not waiting for their bids to hit. They're buying at the ask. So we're filtering this way down, and I don't even know. Okay, so we did find some things. So we've got Amazon calls. We've got a couple of sets of Amazon calls, these 133 calls. So from here, we can start kind of poking around at these individual names. Perhaps some of these names have earnings coming up. I'm pretty certain Amazon has earnings in the next, so Amazon has earnings tomorrow. So not a surprise to see some big orders coming in on Amazon, but you've got Shop, you've got Unity, Tesla, QQQ, PDD. So this is just a quick and dirty way to find just the biggest unusual options orders in the call side, or on the call side, just in an instant. Now we do have this unusual options widget here, but what this does is this shows us all of the unusual options for the ticker that's on our chart. So we only see Amazon. So previously, this is actually a pretty new feature, this data flow filtering. Previously, you could see the orders and you could filter by one particular column, and now you can filter by all the columns. So super, super helpful little tool if you're using some of this more it's less technical, it's more inner workings of the market type data. And again, we have analyst estimates, dividends, earnings. You can very quickly see things like, for example, Apple's a really interesting one, because Apple has only missed earnings like 2 times in the past 10 years, 11 years, something like that. This earnings surprise, this would be how we'd know how many it's missed over the past X whatever years. And so they missed February of 2023. The previous time that they'd missed was April of 2016. Before that, it was 2012. So 3 misses in the past 10, 11 years on Apple. So that's kind of a little bit about Dataflow. Some kind of less heavy technical tools that I find really useful. I was sharing this with Alex recently. I really, really like the volume by price drawing tool. So if you are a price action trader, perhaps you have seen, you don't even have to be a price action trader, but perhaps you've seen volume by price. So volume by price shows us the amount of volume at each individual price point from a particular starting point. So this is just Amazon. This is the start of day today. This is our volume profile of Amazon at the start of day today. You can see the point of control. This is where the most volume occurred. It just gives us an idea. It's kind of like volume weighted average price in that way. You kind of can gauge the bullishness or bearishness at any given time based off of where price is relative to where all of the volume is. Of course, this is our consensus. Point of control is like consensus at price. Everybody has agreed that for today, 128.50 on Amazon is fair price. But one thing that I use that you see other traders use, a lot of people, it seems, don't really realize this is on the platform, is there's a volume by price drawing tool. And so what this allows you to do, it allows you to sequester the price action that you want the volume, that you want to see the volume for. With the volume by price indicator that we were just using, this guy, it's always going to measure from wherever it's measuring from up to the current candle. So you're not getting to sequester that price action in the same way. So I like to use this volume by price drawing tool, and I specifically like to use it on the previous day's price action or the past couple of days price action. And I'm looking for these untested points of control. like this guy right here. So this was yesterday's point of control at 133. These untested points of control, some people know them as virgin points of control. They can be really, really powerful areas of support and resistance. Price has a tendency to like to gravitate back to untested levels of all kinds.
Hey, Jason,
Alex.
Jason, I'm going to butt in. Look, hold that chart there. This is really interesting, right? So my point earlier was why you want to use stock charts is because there is more knowledge in a stock chart, particularly a very liquid stock like Amazon. Okay, and the things I say about charts are most relevant to very liquid things like Amazon, Apple, the S&P, the NASDAQ, all these things. Look what happened between the 31st of July and the 1st of August. First time I've seen this, which is that right there, the point of control, that's distribution, right? So what you've got there is large accounts selling. Why are they selling? Because they know there's a rate cut coming, right? They know this. You know, you don't know this. I don't know this. It's not on the wires yet, but a lot of people know that Fitch are about to cut the ratings. You can't keep that sort of thing a secret. You think about the number of people that are involved in that decision and distributing the news. That right there is distribution of a mega cap right before a rate cut. That's why you use a stock chart, because if you saw that distribution, you would think, something's up there, right? Big volume spike. Look at the volume by price spike right up there at the top. Price action is bound in the 130, 134 level all the way through the 31st of July and the 1st of August, and then boom, look at the drop at the open this morning. That's why you use a stock chart. Simple.
For sure, man, for sure. So, you know, and it gets, if we want to take this like into some simpler layers, things like creating alerts at places like this, you know, it's the simplest thing in theory, but knowing where this level is, I only know where this level is because of this tool. So create a line, create an alert. I can very quickly just set up my alert. This thing's going to let me know when price gets to it. I can define everything I need to define about it. The sensitivity, this is the area around the line that the alert fires within. So if price gets within an area around that, I can define that. I can define what causes the alert to go off, whether price breaks through or touches or bounces. I can define the time frame that I receive the alert on. I can define how long the alert lives in my system, how many times I want to be triggered on it. If it happens to, you know, if price were to come up here and touch and bounce and break down a little bit and then come back and bounce and hit it again, maybe I want to be alerted if both of those things happen. Well, I can use multiple triggers for that. And then now this is just my eyes and ears. I can walk away. I can forget about this until price gets back there. It's just a nice checks and balances, you know.
And again, just to why that's important and why do it is because let's say that price gets back there in the next, you know, week or two, let's say, right? What that tells you is that the equities market for, you know, these liquid mega cap stocks has gone, okay, we've had to think about, you know, the rate cut. We don't care, right? Back up to the races. And if the Amazon price pushes up through that level that Jason just highlighted, then you can be fairly sure that even if they haven't done it yet, Apple's going to do that, Microsoft's going to do that, the S&P, the NASDAQ are going to do that, because what the market is telling you is that was just a fake out with a rate cut, right? That was just to, you know, shake out some weak hands, buy some stocks some lower, maybe to make some money on some trap shorts that we had. It was just a game. It wasn't a real thing. And so if Amazon pushes up above that zone again, there's a good chance that again the market's gone, okay, we're fine with that AA plus rating, off we go, and back off, you know, up to the moon. So that's why these are not alerts that are purely technical in nature. There is always a reality to them. My point is that you'll see reality in a stock chart a long time before you see it, you know, in the news. And so the level that you spotted over the last 2 or 3 days as the limit where distribution was happening, if Amazon pushes up again through that, it tells you that the market's probably shaken off the ratings change, and that will tell you a whole lot about what to do with the rest of your equities portfolio.
For sure, yeah, and you can define the trigger, right? You can say, well, I only want to know if price actually breaks through that. If price doesn't break through that, price could get right up to it and then ultimately fail, and this alert will not go off because you chose to only be alerted on that breakthrough, right? So Yeah, and I guess I kind of want to get it as simple as possible for anybody who is totally new to this. If you're totally new to trading, totally new to technical analysis of any kind, we do have a bunch of tools that are available on the platform, kind of for folks that are new to things. We've got, let me show you here real quick. We've got an auto fib drawing tool. This is going to automatically draw a fib sequence over the most recently completed move. This one is, let me add some levels here. I just keep things very, very simple. So you have the start point, you have the finish point, and then you have the target level. But it's going to automatically draw fib levels on any time frame based off of the most recently completed move. We've got a auto trend line drawing tool, which again is going to draw the most recent, or the most powerful trend lines occurring on any time frame. We've got auto chart pattern detection. This includes things like broadening patterns, ascending channels, descending channel, all of the ascending, descending, horizontal, whether it be channels, triangles, double top, double bottom, wedges, falling and rising wedges. It's going to automatically find all of those things for you. Now, what you do with that information, the platform's not going to tell you what to do. You can certainly utilize the strategy tester to kind of test your strategies out and see how they've done historically. But this is just a very, entry-level tool that can be utilized. The chart patterns, I will say, the chart patterns are super helpful in the scanner because you can literally scan for like falling wedge breakouts. Like it'll instantly find any falling wedge patterns on the chart, and it'll find tickers meeting that criteria. So let me just show you kind of what it looks like here. There are some handmade drawings on this chart as well, but let me find my falling wedge here. I might not even have it turned on. Nope. I do have it turned on. Okay, where is it? I see rising wedge. Where's the falling wedge? See, even I am constantly learning and relearning. So yeah, so here's your falling wedge pattern that the platform's automatically identifying, this green triangle here. You got the breakout, and all we know, all this looks for is that there's a falling wedge and price is broken above it, and this is going to find every single chart that's meeting that particular criteria right now. So, I mean, if this is the type of analysis that you like to do, this just wildly speeds up your analysis, right? By being able to scan for this very specific chart pattern and very specifically where price is relative to it. And you could add conditions to this and say, I want to see specifically that it's breaking above this today. I want to see specifically that it's doing it on X amount of volume. You could define the amount of volume, but it's just a very quick and easy way to get you so much closer to the thing that you're looking for, is really what this is all about, or what this functionality is all about. I could go on and on here. I don't know if anybody has any specific questions about anything. Alex, if you have any questions, I honestly don't really know how much time we have, so you tell me where to go from here. Alex, are you there?
Yeah, sorry, I was on mute.
No.
I personally, I'm continually blown away by the things that TrendSpider can automate that we do manually ourselves a lot. And it's only because I haven't got around to, frankly, learning the system that we still do it manually. But I can tell you that this would save a great deal of time. Now, for anyone that's watching this that is just bewildered, don't be. The best use of stock charts, and the best investors and traders will tell you this, is find a thing that you're good at, right? And most people, when they use stock charts, aren't good at 25 things. They're good at a few things. They become good at recognizing particular patterns, 3, 4, 5, 6, maybe 10 patterns, probably not more, and looking for those patterns over and over again on different securities over different time frames. And so if you develop a knack for, let's say, falling wedge breakouts or support resistance flips is another thing that TrendSpider can do. Don't show you now, but it's just another simple price reversal mechanism that TrendSpider will help you identify. If you get good at these things, automate them, and then you can use the scanner in the system to search for, well, go and find me, all the patterns that I like that are on the weekly time frame in, S&P 500 stocks. Okay, now I can take a look at those and which of these do I really, really like, and which can I corroborate with some other method that says, I think this is a good place to go long or short or do nothing. It's a really powerful platform. It's easy to view TrendSpider, I think, as just a charting package, and it's, as you can see, it's a lot more than that. So on my side, I would say, great job, Jason, and it is always a delight to have you guys on. If folks on the webinar today want to try TrendSpider out, they do offer some free functionality. If you watch the recording of this webinar, which I'll post later across all of our services, there'll be a link in there to go onto TrendSpider and get yourself set up for free. And if you like what's on offer for free, you can take out one of many paid plans. Again, if you do so using our link, we may get a referral fee. And I would recommend everyone check out the free level. And again, if you like it, there's many paid plans you can take out. I will say that much like using a Bloomberg terminal, the more time you put into this thing, the more value you'll get out. Easy to be overwhelmed to begin with, but don't be. Cut it back, keep it simple, and learn the platform as you go. Okay.
Real quick, Alex, I want to correct you just briefly. We do not have a free plan. We offer free trials.
Okay. How long for?
Yeah. So it starts at 7 days. If you need more time,
there you go.
If you need more time, let us know you need more time. The guys over there in customer support are always willing to extend trials.
All right. No, I'm sorry, no free plan. They used to do that, but for 7 days free, that's plenty enough. We don't offer any free trials and anything, so we're much more mean than you. Okay, but 7 days is plenty to figure out if you like it or not. Right?
For sure.
Okay, before we finish off for the day, if anyone has any questions at all, then a good time to either unmute yourself and shout into the system, or you can type questions into the chat box right here. So anyone at all. Just gonna make sure everyone's unmuted our side. Yeah. Okay, no questions. If you do think of anything later on, you can post them to the YouTube video that we'll post, and or you can contact anyone at Cestrian here, and we'll come back to you. Jason is on Twitter, and you can reach him there. So just remains for me to say, Jason, thanks for doing a great job as always, talking us through the system. And thanks everyone here who's attended. Hopefully it's been useful for you. Jason's just put his Twitter handle in the chat box right there so you can see it. Thanks everyone, and look forward to speaking to everyone soon.